What it up, Al? Good morning, everyone, and welcome to this July version of our Startup Enterprise Club. So I'll hand across now to Dan, who'll run through the presentation to say if we could hold off questions until the end. If you've got anything that you sort of want to keep in mind, just stick it in the chat box, then we can come back and tackle that at the end. But for now, over to you, Dan. Thanks.
Thanks. Hi guys, right, to give you a bit of background on myself, I'm Dan Perrin. I'm accountant in practice. I've been for many years. So I'm a chartered certified accountant and chartered tax advisor. And I've worked with many startups over the years, who exist in businesses, expanding businesses. So got the wealth of knowledge, which I'm hoping to make it interesting and share with you this morning. I'm hoping to break that myth that accountancy is boring and bookkeeping is boring. We're going to try and make it as interesting as we can and perhaps have a laugh along the way as well. I was interested to see the different types of backgrounds you've all got, so I'm going to try my best. I put some generic slides together, but I'm always on this type of event mindful that when we go through stuff, we might need to divert away from the slides to make sure we keep everybody happy in terms of business structures and everything else. So I'm going to start by sharing the slides if they share through okay. Now, can you guys see the slides okay there?
Yeah, we've got that down, thanks.
Brilliant. I've got my little edit window there so I can see that everything's working. So where I'm going to start is just in case for some of you that have jumped in as a sole trader, some of you that jumped in as a limited company partnership, I thought one of the first things that might be worth just having a quick chat about is the differences between limited company and sole trader, because some of the times getting the wrong structure to start with can make a bit of a difference because you end up having to go backwards to go forwards. So a lot of people will just jump in as a limited company. That might well be the right option once we look at it. But some businesses will start as a sole trader, see how the business idea goes, and then progressively say, right, well, 3 months, 6 months, 12 months or more, I'm going to become a limited company. It is usually a lot easier to go from a sole trader to a limited company rather than vice versa. But one of the things I wanted to sort of get into is why would somebody go straight in and look at a limited company? And some of the areas that people look at is tax savings. If you read any articles, the worst thing you can look at is type in Google, should I be a limited company? Because you'll sometimes get some biased sort of bits and pieces on there where they tell you there's plenty of tax savings if you're a limited company. It's not always the case. And if you've got an accountant, they'll be able to look at if there is tax savings, if you're worse off, better off. And it's worth looking at that first just to see before you jump in as a limited company. You do have that distinct entity and limited liability sort of fit in together. I've got a couple of clients who've had real problems over COVID and they owe some money. They've just got themselves into a hole through no fault of their own, can't get out of it. So because they're a limited company mechanism there, they are actually looking to liquidate the companies because they just can't afford to service the debt that they've got. If they were a sole trader, then typically that's something that could cause a bit of a problem for them personally. All I would say is if you are a limited company and you are looking at a limited company route, just check what you are personally guaranteeing as well, because limited liability is banded around a lot as far as limited companies is concerned. But if a lot or most of your suppliers are insisting on personal guarantees there, then that can put you back in the same position as if you were a sole trader because you're responsible for all your debt there. Also think about what your businesses are going to do going forward, who your customers are. If you're tendering, I know I've dealt with a few clients myself over the years that have tendered for work, and sometimes the tendering process will either insist on a limited company or they'll favour a limited company on it. So you've got to perhaps think about that in terms of who your target audience are. If you're going to get investors to expand your business, if you were a company limited by guarantee and you're going to bring in sort of grants and funding and things like that, then it's a no-brainer to be that limited company because it's so much easier to actually get the investors and get the money and everything in place. And similarly, if you are looking at progression with business partners, family, anything else, you've got succession there as a limited company because, after your days, then the limited company will still be there ready for somebody else to take over. So it's just trying to give you a general feel on a limited company and whether it is the right sort of structure to get to. As I said, some people will go into it straight away. Typical businesses I will see they'll go in straight away is any that have got high risk and they're worried about losing their houses because the nature of the work is quite risky. Some people are quite happy to be a sole trader to start with, give that business a few months and just see where they get to. That's the important bit to think about. Quick that. So limited companies is something that you've just got to be mindful of there. I've put a couple of little bits together, and some people think, well, what's the difference in terms of information and accounting with a sole trader and limited company? Whatever way we look, we'll have a chat further on about record keeping, what we need to do as far as the business is concerned. And to a certain point, a lot of the record keeping on day to day itself could be similar, but how the information is presented is quite different in terms of what's available to the public. If you're a sole trader, what you're going to do is put your set of accounts together, profit and loss balance sheet, and then use that information to prepare your personal tax return. Whereas if you're a limited company, you're still going to have to do your personal return. You've got to do a company tax return, and basically a set of accounts of some sorts is actually then filed with Companies House, so it's in the public domain. So people will look at those accounts and have certain information. So it's worth just bearing that in mind. And if you go to Companies House website, totally free, but you can have a little look at what information's in public domain for different companies. All right. So it's just that idea of disclosure, which is quite important to think about. A couple of you mentioned to me that you haven't started trading yet and you're going to be sole traders. Just something that's worth putting in, and I'll share these slides, happily share these slides. But basically, you do need to register with HMRC if you're a sole trader, and there's no immediate panic to do it straight away. So a lot of people are thinking, oh, I'm going to start trading on Monday. Have I left it too late to register? The answer is no, you haven't. What you've got is, if you start trading, you get to the end of the tax year and you've got 6 months then to register. So give you an example, you start trading on the 14th of July, start trading this month. You don't actually need to register until the 5th of October 2023. But the big but is, get it done sooner rather than later. If you have started trading, you can forget about it until the last minute. At least there's one thing to just tick off the box. Number of people have come to me like three in the last month. Can I do the tax returns for 2021, which is due by the end of January? Yeah, no problem. But they haven't registered yet. They're not late as such, but it just means that we've got to wait for tax reference numbers, everything to be set up. Get it done straight away. You've got proof of that you're self-employed if you ever need it, and everything's done and dusted. It's just a little tip to get it up and running. If you're a limited company, normally HMRC will assume that you've actually started trading from the day the company was incorporated. So if you formed your company sort of February, March time, for example, and you start trading now, it might just be worth dropping them a little letter or trying to get in touch with them and say, look, just to make you aware, my company was formed on this date and started trading on this date. So then they will update their records as well. Only a phone call or a letter. That's all you need to do to sort that out, to make sure that's all done and dusted. Just makes the admin so much easier. Right, being taxed, I mean, those of you that are new to tax and everything else, it's scary, yes, it's scary, but if it's handled the right way and it's handled the best way possible, then basically it could be as straightforward as you make it, okay? If you're a sole trader, for example, you were self-employed, a lot of questions I typically get asked is, well, I've just started as a sole trader, I've just finished with my job, how's my national insurance all sorted, have I got to pay this, pay that? If your main income is from self-employment as a sole trader, then your tax return goes in and that will take care of your tax and your national insurance. It's all taken care of under one umbrella. So there's no issues about having to pay different taxes at different times. That's all nice and neatly dealt with. You put your accounts together, work out your profits, fill up your tax return, and then basically you'll be in a situation where that will help you work out how much tax is due. Like anything, and we'll keep coming back to some of the expenses that you can claim, and we'll talk about those in a few minutes as to what's allowable expenses. If you're a sole trader, some of those will need to be adjusted for private use, and I'll come on to that and look a little bit further on. Depending on the size of your income, your tax bill could be anything from 20 to 30% of your profit. It just depends on the size of the sole trader business, because I've got to factor in tax at 20%, national insurance and other bits and pieces as well. So, and you've got tax-free allowances. So typically, 10 to 30%, but if you keep an eye on your profit figures as you start and get monthly stuff together, you'll get a much more realistic idea of what that percentage is going to be. So you can do calculations and things. All right. So one of the things I always stress to a sole trader is that if it is your first year of trading, you've gone back as a sole trader, if you're making a loss because you've got a lot of setup costs and the business is developing, from a tax point of view, that's not a bad thing. From a monetary point of view, it might well be a bad thing. But what I'm trying to say with a sole trader is if you've got a loss there, then look at what you can do with that loss. If you were earning in a job last year, well, I made a loss of this tax year, I could perhaps carry it back and get some of my tax back from last year. So utilize what's available just to be as tax efficient as you can in terms of the bits and pieces with it. There are some rules around with limited companies, but they're much more rigid. So if you make a loss with a limited company in your first year because of gaming setup costs, the main thing you're going to see with that is that loss is going to be carried forward to the future, which isn't necessarily a bad thing, because when you if you make profit in the next year, corporation tax rates for companies are going up, which means you might actually get more of an advantage of it in the future. So it's just being able to look at what you can do if you've got a trading loss there. This is the one I wanted to spend about 5 minutes or so on. This is probably the most popular question I ever get asked as an accountant. What expenses can I claim? Now, the general answer I will always give to you is, what expenses are you looking to spend on for your business? And if you can justify to me that those expenses are business expenses, then you're halfway there to them being allowable. If you're going to go and buy a static caravan in Tenby for your business and you're not actually using that for business purposes, sorry, the answer is going to be no. If you buy in, if you've got different other costs where, I'm going to go and buy a brand new suit, tentatively that won't be allowable because it's not a business expense as such. So there's certain rules there. There's just too many rules to me to be able to say, here's an actual list of everything you can claim. It just doesn't work like that. You've just got to look at it. And similarly with a limited company, is it a cost that's incurred, for the business and used for the business purposes? Accountancy fees is typically something that will be business orientated most of the time. Advertising and PR, as long as the advertising is relating to the business. Most famous question I get asked is, if I take a box out in the Liberty Stadium, can I claim the cost back against my business? Well, no, not necessarily, because if it's not advertising as such, it depends what you're using it for, but most of the time it's not advertising and PR, it's entertaining, and that is one area that is not on the list. So it's worth making a note of that. If you're entertaining customers, that is not an allowable expense for business purposes. So if you meet the potential customer for a coffee in Costa, you pay for the coffees, or you take them out for a meal, then unfortunately, because they're customers, that's not going to be an allowable expense in terms of what you got. Other things we've got on there, God forbid you get bad debts, because bad debts are an allowable expense, but nobody wants to have them. Bank charges, we've got bonuses, cleaning, for consultancy fees. I've just put a sort of list together. I'll just pick on a few of the main ones. Normal general legal advice. So if it's just perhaps your solicitor's going to have a look at your terms of business, don't have a problem with that. If it's anything more in more detail, there might be something there. But legal and professional and solicitors, yeah, normally they can be an allowable expense. Motor expenses, again, be careful. yes, we can claim motor expenses or we can claim mileage, but we're only claiming for the business element of what we got. We're not claiming for private side of it. Slightly different rules with a limited company, but it's still coming down to the idea of business expenses should be what's going into that profit and loss account. We've got repairs and maintenance. It could even be down to things like buying a phone charger because we lose them every so often. Great, fine, that's a business expense because I'm using my phone for business. Software, perfectly happy, if the software is used for business, any training costs, any welfare costs. And similarly, as a sole trader and to a certain extent a limited company, you are able to claim pre-trading expenses. What I mean by that is if you've started incurring expenses before you've done that first sale, then those expenses you've incurred for the business can be treated as if they were incurred on day one. So in that sense, keep all receipts as much as possible. Stationery and printing, again, that's another one we find with. Telephone, a little bit out of date with some of the headings, telephone and fax. I don't think I know anybody that uses a fax anymore. But telephone, internet, mobile data, all of that sort of stuff is fine. If you're out and about working, typically like a builder, for example, you're on site all day, you might be able to claim food allowances, which classes the subsistence that we've got there. If they call them ancillary workers, but it's somebody who's basically out on the road a lot rather than being office based, every single day of the week. Use of home. Can we claim for use of home? Yes, we can. But again, we've got to be careful and reasonable in what we claim. Limited company or sole trader, we could look at claiming both mechanisms. But what we've got to think about is what are we using for home? It's one room in the house. It's one room that is, well, typically I'm guessing it's one room you've got. The electricity and heating of one room. That's not going to be £1,000 a month. It's much more likely that it's going to be something like about £5 or £10 a week if you can justify the £10 being on the top end of the scale. I think the revenue will allow about £6. If you can prove that it's slightly more than that, then obviously you can go for a higher figure. But it's not really excessive amounts of money that you've got. If we've got staff, by all means, wages are a business cost as well. And we'll talk about taking on staff and record keeping on that in a moment. Okay. If there's any costs that you're incurring that are not on that list and you're not sure of, chuck them in the chat box. This we can discuss them when we get to the end of the presentation. So if there's anything where you've got a unique business and you think, I'm going to incur on this particular cost, let's chuck them in the chat box and we'll have a quick chat on them. All right. As I talked about, we do need to adjust all these expenses that we've got here. We do need to think about adjusting them for any private element that we've got. My mobile phone, if I was a sole trader, then basically I'd probably use it about 80–90% for business, 10% for private. So what I should be doing is adjusting my mobile phone bill that I claim by allowing a percentage for private use, which I can't then put through the business accounts. There's no exact science to it. I'm not sitting there looking at my number of minutes as to how many are business every month and how many are private. I might have done it as a rough idea over a couple of months, and that's sort of where the percentage comes from. Same if you were claiming for fuel and things like that, then perhaps we should be looking at trying to come up with a percentage between business and personal. What's worth bearing in mind as well is if you are a limited company mechanism, then the private use expenses get adjusted through what they call benefits in kind. And I can, anybody who wants to have a chat on those, we'll have a chat when we come on to the main bits further on. But they are what we call P11D items. So you might end up paying the full cost goes through the limited company, and then you pay some tax to compensate for the private use. So it's a little bit more difficult in the rules, but comes back to a similar effect of tax relief and everything. All right. This is what I wanted to spend some time on as well. We've talked about expenses that you are likely to incur as far as the business is concerned, okay? What we always get asked, and this is what worries everybody about, is what record should I be keeping for the business? You do need to keep robust accounting records. There's no getting away from that. There's legislation there that HMRC can apply. Very rarely they will. But if you do not maintain proper accounting records, they will fine you up to £3,000 per year that you don't keep it. So if you're a little bit lax in your records, that's not probably going to get you a £3,000 fine. But if you don't keep any records whatsoever, then now's the time to start thinking about making a change and just keeping proper records. What I would stress is records are digital or paper. If you love paper, that's fine to a certain point, which again I'll come on to in a few minutes. But perhaps we need to be thinking about some digital stuff that sort of goes with the paper records as well. Sales invoices, that can be done as simple as buying an app that just does sales invoices on your mobile phone. They can be done through bookkeeping software, which we'll talk about in a few minutes. But you need to make sure that if you're doing sales, you've got sales invoices. Purchase invoices are kept digitally or by using, keeping a lever arch files like in the picture there. I got to be honest, I'm probably teaching you guys to keep purchase invoices. I used to be sometimes one of the worst for keeping them, because I'll go to the post office, send a load of letters out to clients, and then I'll have the post office receipts in my pocket, and then I'll just put them somewhere safe and never see them again. So to break that habit, what I've actually done, something very simple, is on my mobile phone, I've just put in OneDrive. I've linked OneDrive onto my phone so that it's so inexpensive. I can literally take a photograph of that receipt as I walk out to the post office. It's in my OneDrive, and then I can put it into my bookkeeping software later if I want to, or just leave it in OneDrive. I've also got it digitally, so if I'm away for a weekend and I need a receipt for something, or I've got to check something on a receipt, they're there in my phone, on the laptop or whatever, and it's so simple to use. You just put the app on your phone. There's even a little camera button on the bottom of the app. You could just press the button, photograph it, and you've got a perfect scan of that receipt. And then once you know they're safe, as long as you've got the digital, then you're totally fine. Okay. Bank statements, again, it really does depend what bank you're using. A lot of people are using the Starling Tides, and there's Monzo, and there's a few others out there. These digital banks, they're fine, no problem with those. They'll give you bank statements digitally, the same as a lot of the high street banks. But you do need to keep your bank statements, especially if you do move banks in the future, because you need to keep your accounting records for at least 6 years. I would say longer if you can. And if they're in a digital format, they're not going to take up the attic space or the cupboard under the stairs or whatever. They're going to be, a little bit of data on your computer, which can then be backed up in the cloud, so you haven't got to worry about storing stuff. Mileage records, this is the other thing I say to people, that they are very disorganized in keeping mileage records when they go to see customers. What I look at to make it nice and easy is my particular car. There's an app for my car, for the phone, and basically there's apps you can buy out there for a couple of £1 a month anyway, and they work on GPS. You jump in the car, and literally you just go from where you're going to see your client, and it will track that mileage. Unfortunately, it will track your mileage if you have a sneaky McDonald's on the way home, or if you go somewhere else, it will track those journeys as well. And all you've got to do is sit down of an evening or the end of the week and basically swipe one way for business, one way for non-business, like the Tinder of bookkeeping, as somebody once told me. And it's literally a way of keeping track of your mileage records. So then you've got them there. They're all in one place. You don't even have to sit down with a little mileage book. Let the mobile phone do the work for you. With most phones it will work with. As I say, if your own car will sometimes have an app for it. I went to see somebody last week, and she didn't even realise her car had an app, and she put the app on. It didn't cost her anything, and now she's over the moon because all her journeys were already tracked, because there was bits and pieces in there anyway, and it's all there. It's nice and easy, and it just puts it into an Excel spreadsheet, and you can use it for your records and everything else. Other thing I always stress is, whether it's digital or paper, keep diaries and notes on jobs. If HMRC come along and want you to support your level of takings for the year because they think it should be higher than what you've got, if you've got diaries to show what you're working on and where, as well as the invoices, it gives you a really robust set of records. So if you've got an appointment diary, just keep a printout of that or a digital copy of that every month, every year, and then you've got your own notes because you might make notes on your diary, and it is perfect because you need that sort of stuff to be able to support it. If you handle stock, get stock takes done. You'd be amazed the amount of stock you think is worth more than it is. So get those stock takes undertaken, and literally, they'll give you a good idea of where you are with the business. The weaker the records, the weaker your figures are going to be, which is also a problem if you're trying to assess how the business is doing. I had one client who came to me many years ago, little sole trader, and his records consisted of an A5 piece of paper. Now he's on a bookkeeping package, and it's so simple for him to use. He's over the moon with it, and he's got robust records to the point that if HMRC came looking at them, I'd be very happy with them. It's and that is the problem. If you've got weak records, you're very vulnerable to HMRC inquiries as well. I've seen so many of those over the years. That's where they tend to come from with it. This is something that I think is relevant for you guys in the sole trader category, because some of you may have already read about it, some of you may not be aware about it. But if your income source from self-employment, if your income, not your profits, but your income is going to be over £10,000, from the 6th of April 2024, making tax digital income tax is coming into play. What that basically means is there is a requirement to keep digital records. So this is more or less where you need to think about having something of a bookkeeping package or a very good spreadsheet that will record your transactions. Because unfortunately, from the 6th of April 2024, which is only coming up to about 18 months away, you're not going to be doing a tax return at the end of the year. You're going to be submitting figures to HMRC every 3 months. Every 3 months you'll be making a return, and you'll be doing a couple of declarations at the end of the year. So instead of one tax return, we're making the best part of about 6 submissions to the tax office for processing. So just be careful in terms of this. You need to, if you're going to set your business up now, you need to be future proofing yourself. I can't stress it enough to cover MTD income tax. And it's not difficult to cover it, because what you'll be looking at is some softwares, which I'll have a chat with now and on the next slide. If you're a limited company, it's not there yet, but it is on the horizon. So once they've embedded MTD income tax, then basically the next project that the government have got is going to be MTD corporation tax. So it's going to be getting to a point where you're going to be in perhaps 5 years, 6, 7 years time, you're going to be doing quarterly figures to HMRC. So again, it's worth having the right bookkeeping packages in place. Spreadsheets are fine. The HMRC have said there's a lot of controversy saying that spreadsheets are not good enough. They're digital records. They're if you're listing your sales on a spreadsheet, you're listing your purchases. They're digital records. You'll have bridging software which will enable you to take your spreadsheet data and send it to HMRC every quarter. Absolutely no issue with that. But if you want something a little bit easier, these are some of the main packages that are on the market. And what I would strongly suggest is that before you just jump in, if you haven't put a package in place, what I would be looking at is look at your monetary budget for a package. Don't just jump in on the first one. Take a trial on a couple of the packages so you can see how they work, because they all operate slightly differently, and use the one you're most comfortable with. What do they cost? Because that's the main question you get asked. Xero is quite often all over the telly, as is QuickBooks. You can have starting packages with QuickBooks for about £5 or £6 a month for the sole trader packages, and then they get up to the next levels, which are £20, £30 a month. It really depends what you want the package to do. I know Sage have got a few packages out of similar pricing. If you want something that is cost effective to set up with, something like Quickfile, which will also do the job very well. Quickfile will cost you about £60 plus VAT a year. So you've just got to find something that works to your budget and gives you the functionality that you want. I can't sort of recommend a package, and people say to me, can you recommend which one of those is the best? It depends on your business. It really does depend on how you're going to use it, what you're going to use it for, and personal preference as well. But that will make things so easy. Your bank will feed itself into it. A lot of those packages, we can literally just start photographing receipts with it. We can basically have MTD income tax or corporation tax in the future at the press of a button. So literally let this thing drive your business. A lot of you are worrying about what should I be doing, what shouldn't I be doing with records. If you've got a package like this, then what this can actually do is literally take your raw data, you set your customers up in it, you set your suppliers up, and put your information in, and it will drive most of the stuff. What I usually do with some of the clients I deal with is give them an hour, couple of hour training sessions on it, and they're usually experts by the end of it because some packages are so easy to use. Other thing I would look at is when you choose a package, look at what else you can use it for. I use one of those packages, and what I use it for, as well as my accounts, it's my database for my customers' names, addresses, and email addresses. If I'm out and about somewhere and I need to ring a customer, then what I'll do is just go on the app for the package, go into that customer, and then I've got the telephone number, I've got the email address, I've got everything I need there to be able to contact that customer. And if I've got quotes, they're all in there. If I've got invoices, if they ask me for a copy of an invoice, I could just press a couple of buttons and it's been sent to them. So it's just having, a good computerized software in place. If that means spending a few pounds more than you'd planned, just look at what the package will actually do. And, that's the key you've got with it. But they're your main sort of contenders. Do you have to photograph your receipts? No, you don't, as we've said. Sometimes it's helpful if you want them in one place. If you don't want files full of papers, then getting the receipts in that place will make the difference. Okay, couple of other bits and pieces, just mindful of time. So a couple of other bits and pieces we got to think about. VAT, first of all. Now, this is something I'm going to share a bit of experience from with a couple of my clients. The current VAT registration limit we're looking at is £85,000, okay? That is on taxable supplies. If you're not sure if what you're doing is a taxable supply, chuck a note in the chat box. We'll touch on it a bit later on and we'll have a look at it. If you are standard rated, reduced rate or zero rated, they're taxable supplies. So if you're over 85,000, you have to register for VAT. Now, my local hairdressers, I've worked with since they started, there was two girls, one chair in the salon. We don't need to worry about VAT. We're quite happy, and we're going to basically just run our business, run a small little business, and we'll be under £85,000. I went and played hell with them for saying that, because no, that is not the case, because I knew what was going to happen. When there's two of them sharing a chair, they'll end up putting another chair in, getting a part-time member of staff in. Prices go up, cost of living's going up, which means selling prices are going up. VAT thresholds are not going up. So basically, when you set your price in at the beginning, if you're not VAT registered, what you need to be saying to yourself is, who am I dealing with customer-wise? If I'm dealing with Joe Public, so I'm a hairdresser, that's why I'm using this as an example. If all of a sudden I've got to become VAT registered and I'm charging £10 for a haircut, can I all of a sudden put my price up to £12? Probably not. With all the competition that's out there, I probably couldn't get the £12 mark. I'd lose customers. So that means then I've either got to keep it at £10 and I'm 20% worse off, or bridge it somewhere between the £10 and £12 for the haircut. So that's on a small scale, but if you're on a bigger scale with your margins, please think about that from day one. Even if you're not registered, even if you don't think you're going to register, you'd be amazed how things just change overnight. If I had £1 for every client I've spoken to that said I'll never be VAT registered, I'd be a very rich person, because it literally just gets to that stage where you will just, your sales will just start shooting up, and all of a sudden you're over that VAT limit. Do you voluntarily register for VAT? Because you can voluntarily register. If you're dealing with VAT registered businesses only and you see there's an advantage in reclaiming some VAT for yourself, I wouldn't have an issue with that. Wouldn't do it if you were dealing with the public, voluntarily register, because you might price yourself out of the market. But VAT registered businesses, not a bad idea, because it will enable you to get the VAT back on any expenses or anything that you've actually got. Right. VAT, if you want to ask anything on VAT, I've just kept it quite generic there. But if you want to ask anything on VAT, I'm quite happy to answer anything you've got then. PAYE as well. The bloke down the pub usually tells you, because I've met him so many, I've never met the guy, but I've had his advice passed on through clients so many times. Bloke down the pub says, oh, just chuck your spouse or family member on the payroll. Don't have a problem with that, as long as they're working for the business. You can justify a role for them, but more importantly, you're actually putting them through the PAYE scheme and you're reporting their earnings to HMRC. Otherwise, HMRC will come along and say, sorry, that's not a business expense because you haven't put it through payroll. What you need to be looking at is taking on staff is a worrying factor, which we'll talk about in a second. But what you need to make sure of is, well, any shadow of a doubt, you put a piece of software in to run your payroll. Gone are the days you do it manually and you wouldn't want to. What you would basically do is get a piece of payroll software, which costs you anything from free to a few £100 a year. And the free ones are HMRCs, which if you've got 1 or 2 members of staff will do the job. Some of the other packages for a few members of staff are like 40-50 quid a year. So basically, you need to work out how much tax and NI to take off that employee and make sure you regularly pay it over to HMRC. You may not take staff on for a little while, but if you do, then it's something to think about with it. These are the areas on the next slide that everybody falls foul of. And when I go in, I feel a bit like a Grim Reaper, where I'm literally saying, you haven't done this, you haven't done that. So when you take on staff, moving the accountancy to one side, these are things you need to be really thinking long and hard about. HR, if you've got a member of staff in place, you will need to have employment contracts, staff handbooks, different things like that. You might need to bring somebody in, like a consultant, to do those for you, or you might have a subscription service or whatever. But they are worth having, because if you get employment disputes, and typically businesses do, then they're going to cost you a lot of money in legal fees and everything else. The other one I'm going to stress to you is you need to be very careful with minimum wage, and this feeds into the point above. I was working with one of my clients that is a nursery, a children's daycare nursery, and they basically pay slightly above the minimum wage. Everything's fine. HMRC come along and they asked to see the HR documents, the employment contracts and staff handbooks. What they got wise to very quickly was that the members of staff were provided with polo shirts, which was fine, no issue at all with that, but they got the impression that the members of staff had to wear black trousers and black shoes. Now, if that was a term of the employment, then if the employees have to buy those trousers and shoes themselves, that affects minimum wage. And what HMRC were trying to do in that case was build up a case there so that the employees were below minimum wage, charge a lot of penalties, and also would have cost, if they were successful in what they were trying to do, it would have cost the business about 20 grand. 20 grand the business didn't have, I might stress as well. And it's all about minimum wage and making sure that your T's and C's and your contracts and everything are all done properly. You know, it's making sure there's no ambiguous areas and you're fully compliant with everything. And I've seen an increase of minimum wage visits where we've really tightened things up because of certain areas that are being looked at. If you take an employee on as well, there's pensions to think about. Auto enrollment pensions that they might decide they want to go into. The employer pays, the employee pays. So what you need to be thinking about is, if you're going to take a member of staff on for £1,000 a month, all of these points that we've got on this slide, you need to be thinking about as well, on a piece of paper, because they're all costs that add on to that £1,000 that are all relevant. You know, we've got to have insurances. You know, minimum wage goes up it's gone up quite heavily every so often, every year. So basically, we need to make sure that we've factored in the heavy hikes in the national minimum wage as well. It's no good just you know, getting a situation where we can make do now. We need to be planning forward, you know, in terms of what we've got with it. One of the last points I'd probably go on to make sure we've got plenty of time to go through questions, just keep an eye on the time, is if you're a new business, I don't care whether you're sole trader, partnership, limited company, whether you're not a CIC, a charity or non-profit making, get the budgets done, you know, get the budgets done, because you need to know how much money you've got coming in compared to what you're going to spend that money on. I've got plenty of templates I can share on things like that. And the most important things you've got to do with a budget is literally revisit them regularly. I see so many clients that set a year's budget in advance, and that's it. They won't touch it again for another year. You need to get in and revisit that every so often to make sure your businesses are on track. You know, look at actual versus budget, do some comparative work. I'm not saying you're going to spend days on a spreadsheet with that. And if you've got something like QuickBooks or Xero or one of the other packages, quite often you can just chuck the budget figures straight into them. Chuck the budget figures into the software and it will automatically compare actual with budget and flag up any major variances or changes you've got in the numbers. So there's sort of things there that you need to have a think about, because if you don't do a proper budget, even though there's no requirement to do one, you'd be bonkers not to, because you need to know exactly where your monies are going to go. And you know, if you're going to look at social media, things like that, marketing and different things like that, then basically you're going to need to make sure you've got money in that budget to be able to cover it. All right. Sometimes these are things that I do see when people are looking at it, obstacles with new businesses. You know, you're quitting your job or you sort of stepping back from your job. It is a lifestyle. Your lifestyle is going to change. If you can find stuff like software that will make things easier, then you know that is money well spent. If it's going to cost you a tenner a month to put a bookkeeping package in, you can sleep sound at night knowing that if your bank is being fed into that software, your sales are all raised through that software, you put your purchases in there, then that's pretty much the bulk of your bookkeeping done for you. That gives you a lifestyle where you can relax a little bit. You're on top of your finances. And a lot of these packages, which are brilliant in the way they're made, because they will actually give you a rough idea of what your tax bill is throughout the year. So rather than have to go to the accountant and pay the accountant every so often, do a bit of extra work on working out tax bills, then these programs, once you've got the data in there, they will literally sort of show you where your tax bill is. And also quite often they've got a chart of accounts, they've got the expense headings in there, so you can put in your you know, what you've spent on, and they will tell you if they're allowable business expenses. They've been designed by accountants, and some of the routine stuff, like entertaining, if I put money into entertaining, quite often they will flag it up and say, sorry, this isn't a business expense, and literally help me work my tax out that way. So, you know, if you want to get around your lifestyle and finances, get a good package in place. And then as the business expands, hire the team, but do it at the time that's right and make sure you follow all the right steps. They're the main bits that I basically wanted to cover. So I just literally put together what I thought would be relevant for you guys, with allowing plenty of time to go through questions and have a conversation as well. So that's partly where I wanted to go next, was then to see what you guys want to throw back at me and how I can help them. As soon as I
Super.
figure it.
Dan, lots of really useful information in that. We've got one or two questions in the chat box, which I'll pick up
Yeah.
first of all. If you've got any questions beyond that, you can raise your hand by pressing on the icon of the little man. Just before questions, just a couple of comments that are in there. You mentioned about cloud accounting. We ran a dedicated session on this as part of our Power Hour series back in March.
Brilliant.
So if you go to YouTube and search Business Swansea, you'll find that session along with all the others on that, because I mean, it literally is a session in and of itself in terms of the detail that you can go into, and that covers sort of the broad spectrum of what packages are. The stuff that you've just mentioned, but we've covered it in a lot more depth across the course of an hour. So that's there as a comment. And then just picking up one from Lauren as well, about bank accounts and the various ones. Lauren mentions you can get free agent if you set up a metal business account. Believe you can get you need to be a NatWest customer to get a free metal account. So I guess the same applies, that if you're looking for a business account, shop around, see what products are available as part of that. Because it might extend to your cloud accounting or other services as well. So just to be aware of that one as well.
One thing I always sort of stress with that as well is just, if you are finding that the banks are not providing the service they want, don't, obviously if they've got a free package, use it, but you should always think about having a bit of an exit strategy as well. So what I'm trying to say is keep separate copies of your backups of your receipts and things, because if you did move banks and you didn't have access to the systems anymore, then the last thing you want to do is lose 3 or 4 years worth of records and things.
Yeah. Okay. And we've got a couple of specifics around allowable expenditure, allowable expenses. Liz asks about qualifications, requalifications. I guess the same would apply to training courses as well, stuff like that.
Yeah, normally what the tax rules sort of say is if you're doing a course that puts you in a position to trade, that is not allowable in your profit and loss straight away, because it's got some value that it's going to go over years. If you're doing CPD, there's absolutely no problem with that going in and being an allowable expense. But typically, if I pick on me as an accountant, if I was doing my accountancy exams, then because that puts me in a position to trade as HMRC would view it, the accountancy exams wouldn't be allowable, but the CPD I need to do and any sort of further qualifications once I can trade would be allowable then for tax purposes.
There we are. And then a question about car insurance, about that being allowable. Is that the same as yours, split on your mobile phone in terms of the proportion that you're using your car for private and business?
There's 2 ways you can do motor expenses when you do sole trader set of accounts, so it's worth looking at both of them very, very quickly. Number one is if you go down a mileage route at the 45 pence a mile and then 25 pence a mile after 10,000 miles, that will include everything, including your insurances, tyres, petrol, everything else. The other route you can do is put through your petrol, car insurance, tyres, servicing, put all of those through and then apportion them for business use. So it's choosing which method gives you the best result, really.
Great, thank you.
And
And
quite
another
often
question.
it's the latter option, unless you are a little bit disorganized with petrol and things, and then the mileage will sort of that's why they use that one, because it's easier to administer.
Okay, and then another one from Lydia. Can I use my self-employed account open last May, change the name with business name and register as a sole trader?
Yeah, so you got a self-employed account, business account last May. Yeah, I can't see why you couldn't do that. If it's a self-employed account, then it should be a sole trader account, so I can't see a problem with that. Subject to the bank, obviously, letting you do that.
Yeah, and then Mark, no such thing as a silly question. But if you are one person limited company, how do you pay yourself?
Yeah, that is a good question, and it leads on to a number of different variables. So what I would look at is if I was planning, if somebody set up a limited company and they want to get money out themselves, then what we need to look at is what other income the person's got, because primarily when I call it an owner managed business. It's a company that is run by yourself and you own it. Now, usually it's dividends and salaries. So quite often, if you've got no other income, the mechanism would be to take somewhere around about 900 quid out a month as a salary, and the rest of the money would come out as a dividend. But it is very much a conversation job to get those numbers right. And I'm quite happy if Mark wants to have a chat with me privately. I'm quite happy to have that conversation as well.
Great, thank you. And a question from Lauren. I was registered for self-assessment, but when I went into employment from being self-employed, I was told HMRC. I still have my tax reference number, so should I give them a call, or when I submit my tax return, or will it automatically register me again?
It may, I would say, give them a call, because sometimes the systems don't pick up on it. So I would say it's no harm in giving them a call, because they might direct you towards the website that asks you to re-register, because quite often their systems are not as good as they make out, and re-registering might then tick all the boxes, because if you don't re-register properly, then you miss out sometimes on that national insurance registrations, and it can affect you sort of 4 or 5 years down the line when you realise then.
Okay, Mark says yes, please, to that conversation, so I can break up
Yeah,
afterwards and put you two in touch. That's fine.
yeah, that's fine, no problem at all.
Okay. Anne says, can you say something about capital expenditure and assets?
Of course I can. Whenever we buy something, okay, for the business, then it's one of two areas. Basically, we're either going to buy something which is what we call a revenue expense, which is day to day. So my mobile phone I got here, basically that is a day to day expense. So I'll be paying it every month. If I'm buying something of capital in nature and assets, if I'm going to go and buy a laptop or a big machine or something like that, then what I've actually got is I can get tax relief and tax breaks on that capital expenditure, and it is basically done over, depending on when I buy it and what I buy, I might be eligible to get 100% relief for it in the year I buy it. Now that is 100% expense relief at my rate of tax. So what I'm trying to stress there is, if I go and buy a £2,000 computer up front, so I've got the computer, I'm not going to get £2,000 off my tax bill. I'm going to get the tax rate times the 2,000. So if I'm 20% taxpayer, then I'm basically going to end up with 400 quid off my tax bill, not 2,000. Does that make sense?
It makes sense to me. I'm sure it does to everybody else. And typing a question while she does, just one from me really. In dealing with our startup inquiries in particular, but also our general business startup inquiries for the startup grant, we find we get a lot of people at the moment that have kind of used lockdown to turn their hobby business into something a bit more substantial.
Yes.
And it's probably a bit of a grey area in terms of where that transition exists. But what would be your advice for someone that's sort of making that transition between something that is purely a hobby to supplement their income and making that income a little bit more official and through the HMRC channels?
Of course. Now, what HMRC look at is they look at people's intentions. So if they're trying to decide, the key question there is, are you trading? And if you were doing something as a hobby sort of project, at the start of lockdown because you're enjoying it and you weren't really making any money initially, then one of the tests they will always look at is the motives with it. So in other words, they're going to basically say, were you profit motivated? Did you advertise your stuff on Facebook, on eBay, or whatever to sell it like you would if you were a trader? As soon as you start stepping into that, then that's when you really have started trading. So if you're setting yourself up to be in business, so in other words, you've done your pricing properly, you're looking to make a profit on it as opposed to just cover your costs and materials. And I think the main thing I would always look at if I'm trying to decide when somebody started trading is I'd draw up a set of accounts. If they are now starting to make some money as opposed to making losses, which they might have done previously, that's when I would say they've started trading. If you were doing it as a hobby, you wouldn't have made any money. You would have broken even at best or made losses. But if you're starting to make money on the idea now, then that's when you go into a different category.
Yeah, I mean it's not black and white, but there's a level of reasonableness, I guess, about it, isn't there?
I've got to be totally honest. I've probably had about 3 or 4 potential tribunal cases over the years as to whether somebody's trading or not. So it's
Yeah,
difficult. There's no sort of, it is definitely this or that. But
that's
I
it.
think once you've started going on eBay as a seller, as a trader, then I think it's safe to say you're in that next category then.
There we are. And then just a further comment from Anne. So in effect, 100% rates. Sorry, 100. Start again. In effect, 100% relief means tax bill-wise, it's as if it had been an allowable expense, but
You've
they're
got it.
written on a different line. Yeah, is that right?
That's it. It doesn't go into your profit and loss. It just goes into your tax calculation. But it is basically, you've got it in a nutshell. So it's 100% expense, but the tax break on it is at your tax rate. So if you were a 20% taxpayer, then you're going to get 20% of whatever the item cost as tax relief.
Fine. Okay. And then sort of similar to what we talked about before, side hustles. Do you need to
Yeah.
register? Oh, yeah, you do.
No, you
And
don't.
just to
Sorry, no. I mean, that was what I was just going to mention. Now was register as trade. If your income is under £1,000, so you're doing a little bit of eBay selling, Etsy or whatever, you don't need to register with HMRC, because there's no mechanism for basically for a tax return or anything. There's always a grey area because you don't need to register and fill in a tax return if your income is under £1,000. But I do get a few people ringing me up every so often. They're only doing £600-700, but they're afraid of the jealous neighbour who's aware of what they're doing and who's threatening to ring up the tax office and say that they're trading. So if you had any doubt in your mind and you were a bit uncomfortable because I'm not telling the revenue I'm trading, but I am doing everything properly, bang them out a short couple of sentence letter and say, I'm basically trading, my sales are under £1,000, they're 800 quid or whatever, can you make a note on my record? And that
Yeah.
way, if anybody sort of does a poison pen letter and says you trade in and making money, well, they'll have a look at your record and they'll see that letter you've sent in.
Yeah. I think probably the message is to get on top of it sooner than later, because dealing with the consequences of being caught out probably is not much fun.
No, it isn't. And, when somebody sees you selling stuff on Etsy, I mean, some of the time the tax office have got teams looking at that. And if they've been tipped off by a poison pen letter, as I call them,
Yeah.
then basically they will go through a full investigation on it. And it's just not pleasant for you guys. Whereas a simple letter just to tell them I'm below the reporting requirements, then that's all it takes.
Great. Thank you. Another one from Lydia. Since I'm self-employed, I didn't receive the UTR reference number, and I tried several times to get help from HRC without a result. When I go to identify questions, yep.
I'm only laughing because that is a common occurrence. Very, very.
Okay. When I go to identify questions, is asked two proof, one of which is P60, which I don't have, so I can't proceed.
Okay.
What can be done, if anything?
Yeah, what you can do is the form reference is a CWF1, okay? Now, if you've got a problem down registering online, because they take you through a number of security questions, and half the time I don't know where they get the bits and pieces from, and because they end up having wrong information. But if you get a CWF1, and I think just type that into Google, HMRC CWF1, you can actually get a paper version of the form, fill it in, send it off, and basically they are slow processing. I'll be totally honest with you. You're probably talking months rather than weeks, but prove it's been sent off to them, and you'll have much more joy with the paper form than you will with electronic. I've tried
Good.
with a few clients myself, and I've filled out questions and filled out the forms, and 3 months later, we're still waiting for them. So I've done paper, and if I send paper off, they just tend to go to a different team that deal with it then.
Okay. Mark asked one about profits from cryptocurrency dealings. I guess that's whether it's tens of pounds or tens of thousands of pounds, really, does it? It's a economies of
Yeah.
scale thing.
Yeah, it really does depend on the numbers you've got there with that. And because the other question, is if your sales are, and I'm not saying profits, it's sales is what I'm stressing, are under £1,000, then you haven't got to declare anything under the rules that you've got there. But if it's cryptocurrency and you're likely to be over the £1,000, I would have thought. So you would need to get in touch with HMRC, and again, I'll have if I'm in a private chat with you, I'm quite happy to follow that one up as well. Then I think at the moment HMRC are trying to decide on how they deal with cryptocurrency
I'm
because
sure. Yeah,
there's been a lot of conflicting stuff around with that.
that's it. Okay, not my business and stresses, but if a business didn't sort PAYE or HR and has been employing, how much trouble are they in and what steps could be done to get out of the mess?
Okay. Well, the first thing I would always look at is get the registration done straight away. Okay. I've had people come to me where they're 3 or 4 years behind and they haven't done PAYE. And half the time, when I look at it, there is no tax deductions or whatever to come off. It's just putting the wages through. So we've had a retrospective scheme put in place, pushed it all through on payroll. It's taken a few hours to push it all through, and that's been the last of it. HMRC haven't come back, with any penalties, because it's been rectified and it's been sorted out. The HR side of it, that tends to be a problem only when somebody takes you to tribunal, because if an employee takes you to tribunal, if the employee turned around and said, I didn't have a contract, I didn't have this, didn't have that, then that's when you tend to hit the problems with that. So again, I would be looking to get that sorted out relatively quickly without any delay. Even if it's tax and NI involved, I mean, they might pick up on it, so it's still worth going back and looking at it retrospectively, because if it does get picked up on, what HMRC will do is they'll still go back and assess the tax and NI, and they're likely to put penalties on it as well. So when HMRC charge a penalty, there's two initial categories they look at. Is it prompted disclosure, or is it unprompted disclosure? Prompted means you go to them and say, hand in the air, we've done something wrong and we need to sort it out. Unprompted means we're aware of this problem and you haven't told us about it, and then the penalties are a lot more. So it could be worth, if you want to have a chat with me, or with a friend of yours, for more details, I'd happily have a chat with them. There's no problem there. It's just something, it won't go away, and all of a sudden it could just get picked up on and they'll start going backwards then, and it's like a snowball rolling down the hill.
Okay, interesting one here from Liz. How do you keep information for employment and self-employment separate from tax returns? E.g., been claiming the home working benefit since 2015. I believe I can't claim against for self-employment employment from home.
No, I think all you could do really is, if I was looking at it, if it's on the tax return itself, you've got two sets of pages. You've got the employment pages, you've got the self-employment. So although all your income is reported on the same tax return, if you imagine it like a book in different sections, your employment will deal with that, your self-employment will deal with it separate. Now, as far as the employment is concerned, HMRC will give you set rates that you can claim for you working from home. What I would stress is they did do a concession and relax the rules for the 2 years during COVID, but it is back to normal now. But what I would say is, if it's the self-employed side, then you can't claim it twice. But what I would be looking at is, do the sums as far as electricity and everything else is done as far as your sole trader business is concerned. Compare that with the employment side, and then think about looking at which one would be the more beneficial for you. And because the employment are benchmark rates, whereas the self-employment, you have got a bit more scope to do it on a calculated basis with your electricity bills and gas bills and everything else. And I think going forward, with them getting rid of the relaxation with COVID for working from home allowance, you're probably going to be better off putting it as self-employment instead of employed.
Yeah, I guess some of the stuff resulting from temporary changes around COVID is still yet to come out in the wash to a full extent, and we see where we go forward from here on in.
Yeah, they relaxed a few things with COVID as far as taxes were concerned to help people. And now that we're sort of on the straight and narrow and getting out of COVID, as they describe it, those concessions have basically now been withdrawn. So things are back to where they were 2019.
There we are. Okay, so yeah, Anne, happy to put you in touch to follow up directly or indirectly otherwise. But Anne needs to drop off now, so thank you for coming, Anne. Lauren's typing something at the moment. Has anyone got any questions whilst Lauren finishes typing her questions, in terms of raise your hand and we can take it in person? Okay, there we are.
Oh, pleasure. It's difficult to know because everybody's at a different stage of the presentation, what to do to cover everything. And, it's what I've tried to do this morning is give you an idea of things you need to think about. And, I'm happy to have a chat with anybody, there's no problem there. If you've got limited company stuff as well, I've got some stuff that's more specific, but it's just covering a wide audience really of bits of requirements.
It's one of those things that I think is probably quite intimidating from the outset, but at the same time it's something you've got to actually tackle head on and deal with at some point, because as we've discussed, the consequences of not doing so are a price not worth paying in the longer run.
Oh, definitely. I mean, I'd honestly, push you guys to have a look, if you haven't already, at that cloud session that was done earlier in the year, because you need it. You don't have to. I mean, what I say, people say to me, do the accounts have to be done on cloud? No, they don't. But you've got to look, and there are still desktop softwares out there. But what you've got, is you've just got to find something that's going to work for you. I mean, I've got some desktop software that I use on my machine, and if I'm honest, it's a pain because I've got to get to that machine to use it. Whereas if it's cloud, I can use it wherever I am. If the computer crashes or whatever, then and if you've got to take staff on, or you've got somebody who's going to help you, then having that software is worthwhile. And I just seen the comment on templates. Yeah, anything, you give me a list of what you need, template wise. If I've got something, I'm quite happy to share it. There's no problem. I've got cash books in Excel and things like that as well, because some people, if you have only got a handful of transactions, even if you've got Making Tax Digital coming in, then if you're happy with a spreadsheet and a bit of bridging software to send it to the tax office, then, there's no need to put anything else in.
Yeah, and any accountant worth their weight would deal with all the major packages with regard to cloud accounting, wouldn't they? So you'd be covered in that respect when dealing with individuals such as yourself. So
yeah, I mean, what I try and look at with any client I would deal with is I look across most of the packages that I showed you on that slide, because different businesses have got different budgets, and some are really. I've got some plumbers, electricians that are just about making money, and this coming in, they're going to have to change how they do stuff, and it's no good me saying to them, well, I'm going to put a £35 a month package in. They've got no chance.
Yeah, that's it. Good. Last call for any last questions before we wrap this up. I'll take the lack of typing as a no and assume that we've covered everything. So thanks very much, Dan. Really useful session. So we've covered a lot of ground there. As I said at the start, we've rattled through quite a lot in a short space of time. So this session will be on YouTube end of this week, beginning of next week, depending when I get the video put up. So in the next few days or so, we'll have this video live, as I say, along with everything else that we've run for the past, oh crikey, year, 18 months or so now. So lots of useful content on there. In terms of future sessions, we will be taking a break in August and then restarting these sessions in September for both the Startup Enterprise Club and the Business Power Hour. And excitingly, come the autumn, we're looking to perhaps do one or two of these in person. So rather than being stuck behind a screen, we'll be able to hopefully see you in face-to-face and run this in a slightly different format. In terms of the link to the YouTube channel, Mark, but the quicker answer to your question, Mark, is if you go to YouTube and type in Business Swansea, that will find you our YouTube channel where all those videos can be found. So I think that's everything for today. So thanks once again to Dan. Thank you, all of you, for attending and providing some useful discussion afterwards. As I say, really useful session. Hope you found it useful. I'm sure you did. And we will see you in our next session, hopefully, at the end of the summer, back in September. So thanks all.